All right. Cool. Good to go. So, all right. Day trading 80/20 and the art of printing money. That's what it's all about, right? We're here to not work too hard and make a lot of money. Isn't that day trading? Stay home in your pajamas a couple hours a day, don't do too much, and make money eating ice cream at your desk, right? Well, that's the whole point. So let's see how we can do all that. All right, before we get going, quick disclaimer, not myself or anybody at Trading Terminal is legally qualified to tell you what to do with your money. And my opinion is that even those people who are qualified or certified, be careful with them, okay? Please. They have other motives, usually. So, yeah, there you go. There's a disclaimer. I'm going to breeze through these first couple of slides again because you guys have all seen all this. If you haven't, well, I've spent way too much time on these first few slides in previous webinars. You can have a look, but I think what's relevant here is I've been with the markets or involved with the financial markets since 2017, even with crypto, and day trading since 2019. The rest of it is just another life story. All right, so I'm going to start real quick with showing you the results of what can be achieved, and then we'll dig into how you can do it. So just looking overview over here, got a trade from not very long ago. You can see it was a good day, and the points I would like to point out here are, if you look at the executions, a couple of stop outs, I think one or two here, let's say two stop outs there, one winner, then another stop out there, and then a third winner. So two winners and three stop outs still makes for a good day. So that's the whole idea, right? Your winners are bigger than your losers. If you can't do that, you can't make money. I don't care what your strategy is, or what your mindset is, or how greedy or motivated you are. It doesn't matter. It's all irrelevant. Winners got to be bigger than losers. First, most important point. Here's another one. This one was just a pure winner. You can see get in, and the key point here, holding for the big winner. I mean, look at the winner here. It's close to 30K, but imagine halfway. You're looking at 10, 15K unrealized. Over here, it pulls back. It's 20K unrealized. You take it off? No, you shouldn't, because the target's further out. I'm going to get into how we can identify that and when to hold and when to get out. The point is, you got to make your winners bigger than your losers. And so you got to let those winners go. Let them run, right? You got to give them the time it takes to be a big winner. That's one key point over here. That's how you get these bigger ones. Here's another one, and these are 5-minute candlesticks. Meta going short. I went short on this day. This is buying put contracts going short. Each one of these candlesticks is 5 minutes. So after entry, what is it, 15, maybe 20 minutes before the first set of partials. And you can see that was quite decent. It's closer to 100K than 50K, but you still got to hold and not take partials until it gives you the reason to take partials, until your strategy says so. That's really important. So that's one of the key things I'd like to point out right off the bat. Winners bigger than losers. Otherwise, you can have the prettiest, coolest strategy in the world and get all the YouTube likes you want. It's not going to make money. That's the key point. So how do you do that? How do you make your winners bigger than losers? Again, it comes down to the 80/20 principle. Those of you who have seen some of my webinars previously, even the one I did a couple of days ago, I'm always going on about the 80/20 principle. Well, everything starts from here. All of it. I've been applying 80/20 to everything in my life, but we're talking about day trading here, so I'm going to bring it in for day trading and show you how I apply it and what are those truly few impactful things you need to do to get the majority of results. Like you can see here, there's only a few things. 20% of the efforts you put in will bring 80% of the results you get. And the reverse is true. 80% of the efforts you put in will give you only 20% of the results that you're getting. So where do you think you want to spend your time and energy and resources? Right about here, right? So the 80/20 of day trading, that's what it's all about. That's what this webinar is about. What is the 80/20 of day trading? What are those few very important, very impactful things you can do and should do in order to be in this business for a long time, and for a long time sit home in your pajamas, eat ice cream, and make a lot of money? Yeah? Let's see how we can do that. Again, just to reinforce the 80/20 principle, to make sure that you guys really get it. If you don't get it, I want to drill this one in, is look around you, look in the world around you, and you'll find it everywhere. 80/20 just happens everywhere. You'll find, 80% of a company's output is produced by 20% of its workers. You find 80% of a city's traffic tends to be on 20% of its roads. You'll find 80% of your, 20% of your wardrobe is worn 80% of your time. So all of that counts. As an 80/20 is everywhere in the world around you. And so why not apply it to day trading? That's what I figured. Why not? I mean, it's day trading. Nobody ever told me about 80/20 in day trading. So I figured, let me try it out. Let me see, where is the 80/20 amongst all this stuff, all these books, all these webinars? What are the important things? And then only focus in on that. Everyone still here? Give me a little thumbs up if you can still hear me, because I can only hear myself. I don't know what you guys are talking about. Yes, you can hear me still good? No one asleep yet? Good, good, good. Sorry if I seem a little tired. I've been on the microphone all week, every day this week for hours, and I'll be doing it again tomorrow. So anyways, let's get into this. So 80/20. Let's get into day trading. Oh yeah, and here's the book on 80/20, Richard Koch. Again, I always recommend it. I always tell people this is the book I have my children read before they know how to read. This comes first. And then go read other books, because even in 80/20 you figure out how to read a book in an 80/20 fashion. So you only read, the important parts. Put it that way. But anyways, read this book first. Then everything in this world seems to sort of make sense. So check it out. All right. So here it is. 80/20 day trading. You're licensed to print money. How do you get this license? How do you do it? I'm gonna tell you, got the book. Nice. Go get that. All right. Let's play a little game. Since it's a lovely day, the market's going down, everyone's short, except the guys who are bullish. We'll play a little game. So let's toss a coin, 50-50, right? Heads or tails. Simple enough. I'll make you a guarantee. Every time it lands on tails, you lose $1. Every time it lands on heads, you make $3. Simple enough, right? Let's toss this coin 1,000 times. At the end of it, have you made money or lost money? Any guesses? It's on the screen. Anybody? You can type, it's okay. Yeah, you made money. Harpreet's the only one who got it. Okay, there we go. A few guys. 200 people and 3 people understand this. Wow. All right. You guys get it, I know. Straight up, right? Isn't that easy? So there's a guarantee in place here, right? So the guarantee is you lose $1 or you make $3, and it's heads or tails. And what is heads or tails? It's 50-50, right? 50-50. Now you toss that coin 10 times, you may get 70-30, or 10 times it may just land on tails. That's only 10 times. But you toss it 1,000 times, that's when the 50-50 matters. That's when the law of averages starts to work. It works with the law of large numbers, statistics, right? So you got to think of it that way. So here's the point. You got to make sure that when you lose 1, and when you win big. Bigger than 1. 3 is the minimum I like to put out there. That's what I work with typically. And you got to think about it in a much bigger perspective than today, in the 4 trades you took, or this week, the 20 trades you took, or even in this month, the 100 trades you took. That's not enough. I do it on a quarterly basis. Then you maybe have something like 500 trades, maybe 1,000, I don't know. Then you can look at your statistics and say, oh, I have a 50% win rate, or 20% win rate, or whatever it is, right? So that's how you look at win rates. But of course, you have to guarantee the wins and losers as well, right? In this exercise, as a guarantee. So let's dig into that and see how we can do that with day trading. RVR, risk versus reward. The risk is you lose that $1. The reward is you win that $3, right? Risk 1R, reward 3R. So you got to make sure you do this. Now, the key point here is that you understand that this is like a coin toss. Anything can happen. It's 50-50. You put on a position, it could go in your favor or it could go against you. The truth is you don't know what's going to happen after you put on the risk. Even with a perfect setup, it could go against you. Even with an imperfect setup that you chased, it could go for you. We don't know, all right? But the key is, if you only take those, if you do stop out when you're meant to stop out, you lose that 1R, that one factor of risk. Let's just call it $1 that you plan to risk. And if you let it run for 3R, that's great, because then you make money. And what that allows is that allows you to stop out, because you remember that it is 50-50. There's a percentage of losing trades. You will not win every trade. If you are trading at a 50% win rate, you're doing amazing. That's phenomenal. I mean, these are amazing traders who can do that. 50, 60 is just like, whoa. And those guys are making $100,000 a day at 60% win rates. So, but you got to understand, even those guys lose 4 out of 10 trades. You must be in a position where you can afford to lose, right? It doesn't freak you out, and it doesn't blow up your account, you just recognize it as a part of doing business. It's just one piece of it. You're gonna lose. You're an average trader. You're gonna lose 7 out of 10 trades, 6 if you're really good, right? But if your winners go for 3R as a minimum, then you can afford to lose, right? And Corey, yeah, you will have losing days, but it's not about the days here. Forget about days. I'm talking about trades, specifically trades, not about the week or the day or the month or the quarter. I'm talking about trade by trade, one by one, right? Again, very important. I'm just trying to hammer this one home because the truth is, no matter what your strategy, you're not going to make money unless you have risk versus reward on your side, unless your winners are bigger than losers. Because when your winners are bigger than your losers, you can afford those losers and still make money. That's the mindset. You have to be able to afford to lose. You got to be able to take a punch and not be out of the fight. Always. Otherwise, you're not going to survive the first round. I promise you. You're just not. Not going to happen. So anyways, you have to guarantee RVR in your favor. Asymmetry, as in 1R to 3R is the minimum. All right? No matter what strategy you trade, that's important. That's the minimum. All right, I'm going to show you some examples over the years of how I've done these things. These are trades from earlier, I think first quarter or second quarter of this year. I want you to focus in on the P&L section here. This is the meta trade. Here I made a loss, $1,800. And then within the same day on the Amazon trade, where is it? Amazon there, made it back and a lot more. Made for a decent day, right? You can see the winners bigger than the losers, actually bigger than 2 losers over there. Let's go to another one. Made a loss here on Meta. Sorry, where is it? On Tesla. Here it is, Tesla. Made a loss on Tesla, almost 12K loss on that. Next trade on Meta, there's the trade, and made it back and a lot more. Made for a decent day. You can see the winners being bigger than the losers. This is the point. This has to be the core principle of any strategy you adopt, any strategy you develop, any strategy you evolve. If you don't have this, it's a failed attempt. You might as well go buy Bitcoin at $100,000 a coin and pray that it goes up triple in the next 6 months. Now you're gambling. You might as well just go gamble, right? Go to Vegas, do whatever. But you got to trade. If you're trading, you got to trade this way. Risk management, 1R to 3R. I'm just going to drill home until we get to the next section here. Really, really important. And these are live examples of trades I've taken all within the last year. So how do you guarantee that asymmetry? How do you guarantee that when you get into a trade, it has that potential? Well, very simply, whatever your strategy is, don't take the setup unless it offers you a bare minimum of 3 to 1. I like to look for 5 to 1 typically. All right, so what that means is your strategy must have a defined setup for entry and a defined criteria for exit as in a potential target. And that target better be 3 times away as far compared to where your stop is. And that's a minimum. If it's 5 to 1, it's even better. So even if the setup is really great, it's the perfect ABCD pattern or whatever you like to look at, but the target is just a few pennies away, it's hardly 1 to 1, should you take that or not? What do you think? Perfect setup, but the target's nearby. Just pop it in, yes or no. Should you take it? Yeah, thanks, Harpreet. Don't let me do all the talking, guys. I've been talking all week. You can do it. There you go. No, right? Cool. This is awesome. I got like 50 of you guys saying, no, you shouldn't take it. But how come in the BBD chat room you guys are all day long doing this and then sending me emails? You get like 20 emails a day. I can't make this thing work. Like, well, look at this screenshot. Like, yeah, you took a trade where you're right next to the target. So I figured, let me do a webinar on this rather than answering every single email, right? Like, seriously, guys. Okay. The thing is, we get excited when we see a good setup. All right. And so we want to take it. But most people, a lot of people struggle right there. They get excited about the setup. They get blindsided. They don't look at where is the potential target. Does this thing have room to run? Like, where's the next level of liquidity? That could be your target. Or where's the next horizontal line on your daily chart? That's the next target. So yeah, guys, we're going to get into a few strategies here where I'm going to show you how we look for potential targets and ensuring that they're far out so you can take a good position. But again, even with the perfect setup, you do not take the trade. I can tell you today I saw maybe 3 opportunities. I think Microsoft was one, and I think Meta was another one or something. Perfect setups, but I didn't take them because they were just already at the target, at where I identified a target for my strategy. So I didn't take it. But I took another one. I took Apple, took AMD, took a few others, and they worked out. No big deal, right? So again, very important, you must guarantee asymmetry in your favor before you interact with the market. It's just like walking down the street. Somebody makes you a bad offer, you're going to take it? No. Somebody makes you a good offer, you're going to take it? Yes. Very simple. Okay? Yeah, Mahi, we'll get into calculating RVR and everything. Anyways, I think I've hammered that one home. Anyone got questions on that? Type it in. Let's get into the next one. Okay. So let's say you found the setup. You identified it's a perfect setup. You identified the target's far off the screen. It's like 5R, 10R, whatever. Doesn't matter. Right? Then you put on the risk. All right. So what do you do after you put on the risk? After you put on the trade? Now what do you do? Well, you still got to remember your winners got to be bigger than your losers. You still got to do that. So there's risk and there's reward, even after you put on the trade. So the first part is a risk. What that means is if it goes to your stop, stop out. Please, stop out. Please. I'm sick of you guys emailing me. I blew up my account. How do you trade options? Like, seriously? You blew up an account, you want to leverage whatever you've got left with options. No, don't do that. I would be doing you a disservice if I said I could help you when your mindset is there. I would say to people like that, take a break, go away, talk to me in 3 months, something like that. So point is, when you're in the trade, if it hits your stop, goes to your stop, stop out, hit the button, do what you need to do, get out of that position with the amount of loss that you planned for, the amount of risk that you planned for before you put on the trade. Extremely important. Then the other side of it is also take profits at your target, as in let it go. You already identified the target before you entered, right? Don't forget, you already identified the target before you entered. So let it run. Let it go. Okay? Those are two scenarios. One is it stops you out, one is it takes another 30 minutes and goes to your target. Either way, good. But when do you take it off before the target? That's a tricky one. So what you can do is, depending on your strategy, if you're trading momentum, then you're looking at the momentum. If the momentum is slowing down on the way to the target, let's say it's halfway there, okay, you start taking partials. Okay. Or if you see something totally change in the behavior of the price action that counteracts your whole thesis of the trade. Again, if you're using moving averages for a trade, and if it closes a candle on the other side of the moving average with big volume, whatever your strategy is, okay, take it off, or take off 50% of the position before it gets to the target. Those exceptions make sense, but those are exceptions. Okay, you don't want the exception to become normal. What's normal is you stop when it stops you out, and you hold it for your target when it goes to your target, just like I showed you some screenshots earlier. That's how you make the big money. Let it run. It's the only way to do it. Okay, so that's a tricky one because you've got to earn your own trust, especially on the stop out side. How do you know you're going to actually stop out when it hits your stop? You're going to be emotional, you're going to be paralyzed when you're looking at your P&L and it's against you. And when it hits your stop, you're like, oh, no, I'm not going to stop out. You'll take your hard stop off, and then you let it go against your thinking, it'll come back in a few minutes, no big deal, I can wait. Well, you behave like that, it might work a few times, but you can't trust that. You can't trust yourself to trade if that's how you do it, right? You've got to guarantee asymmetry, which means you stop out when you stop out, when it hits your stop. That's 1R. And the other side is let it run when it wants to run. That's your 3 or 5R or 10R. Again, I'm just drilling this down because this is the core of any strategy. I'm going to get into strategies here now with all kinds of stuff. But if you don't have this as a core piece of your trading, you're not in the right business. You should go do something else. I'll be doing you a disservice by telling you can trade. Really, I wish someone told me that long ago. And I blew up some accounts just not understanding this. That's why I'm just drilling it in. And we got some questions here about hard stops and all. Listen, stops are stops. I don't care if you use a hard stop or you have to hit the button on your keyboard yourself. One way or another, you stop when it gets to your stop. I use hard stops, but it depends on you. That's not a big deal. The point is the psychology. Stop when you need to stop. Let it run when it wants to run. The easiest way to let it run, does anyone want to take a guess? What's the easiest way to let it run when it's already 3R in your favor, but your target is 6R away? James said, don't look, Jordan, or deep. Yeah, walk away. You know my secret? It's about 8, 9 p.m. when I trade over here in Dubai. And my trades take 2 hours a lot of times. So I end up watching a movie on Netflix. I got 6 screens here. I just put on another screen. Or actually, I covered the screen with a movie I'm watching this thing. Isn't that great? 10 p.m. Like, oh, cool. Now I got the profit. Cool. But yeah, if you're struggling to manage the trade, the trick is don't manage the trade. Go watch Netflix. Go cook something. Go and do whatever you like, man. Don't manage it. Okay. Again, key points here. Very key, very important points. Everyone good here? This is how you guarantee asymmetry. You've got to make sure you do it. Otherwise, I'm telling you, you're not going to sustain yourself in this business. You're not going to be here very long. You'll come, you'll make some wins, you'll blow up some accounts, you'll probably email me, and I'll probably tell you, you're not in the right frame of mind to trade. I can't even help you. But really, this is what it's about. Okay, RVR, stop out when you need to stop, let your winners run when they need to run. And that has to be a part of your trade book. All right, Samir, yeah, I use range orders, so I don't like to watch it. So simple enough. DOS, and there's a million tools out there, whether you use TradingView or DOS or whatever. Use the tools. The technology is easy enough. It's everywhere. You can find YouTube and find videos of how to put a trailing stop in or whatever you need. Easy enough. All right, so let's get into some strategies and some setups. Wait, why would I put this one here? Hold on a sec, sorry. Oops, let's go back to it. Again, yeah, these are the screenshots I showed you earlier. You can see the stops. I'm going to make it visual for you. See how to type the stops at? This was an entry, this is a stop. This is an entry, this is a stop. This is an entry, this is the winner. Look how big the winner is compared to the stops. Same idea. This is the entry, this is the stop. This is the entry, and look at the winner. It's way out there. The winners are bigger than the losers. Key point. Visually, this is what it looks like. Okay? You can't see my screen, Jordan? Anybody else having trouble with the screen? You can see? You can see? No can or yes can? I can. You can see. Okay. You gotta click on the screen tab. You see at the top, guys, if this webinar room, there's screens, notes, files. Click on that. You should be all right. Here's an example. I showed you this one earlier. Let it run. And here, look at this. The stop on this particular one, you can see the entry there. The stop was the middle of this big white candle, somewhere down here, basically below this consolidation area. And look where the target is. I mean, this is like 10 to 1. Okay? So letting it run is how you make it work out. You can afford losers. And you need to afford losers. It's like a boxer going into the ring saying, I can't afford to take a punch. Are you serious? Are you serious? You're not if you can't take a punch. We can't see where you're pointing. Oh, okay, that's interesting. Don't know why that is. All right, I'll keep that in mind so I can make sure I point that out. Anyways, you guys see the entry on this chart. The stop loss is right below the consolidation of this entry. It's entering basically in a consolidation area, and the stop loss is just below that. And you can see what the reward is. It's way out there. So it's like 10 to 1. You gotta let it run. Okay. Connection's choppy. All right. Well, we'll look it up. If you can see this chart, again, another winner. How was this a winner? By letting it run. Again, each of these are 5-minute candlestick charts. Letting it run. If you can see where the entry is, the stop loss is right below the entry candle. Right? Where deep the cursor lags? Okay, I'll try and go slow with this then. Thanks. So again, so you can see again, letting your winners run. Again, there's a thesis behind why I let it run. Now let's get into that. I want to just make it clear that the 80-20 of day trading is your winners got to be bigger than your losers. And it's easy to say, but nobody understands it. Everybody struggles to do it. That's the whole point, right? So I'm going to get into a strategy that I've been using a lot lately that allows me to keep the losers tight and the winners big. I talked about this on the webinar on Tuesday, but today we're going to elaborate in further detail. I'm going to rush through this slide quickly because the next few slides will bring it out in much more clarity. So it's a 5-step process, very simple. I call it trading naked because it's trading without indicators. It's just horizontal lines on daily charts and looking at candlestick patterns on a 5-minute chart. And that's it. There's nothing to it, nothing else. All right, first step, draw major levels. Major levels, I mean you're looking at the daily chart. Okay, that's step 1. So just horizontal lines, support resistance lines, the basic simple stuff. If you don't know how to do that, join the pre-market show on the BBT YouTube channel. We do it every day. Carlos and Peter are showing you how to draw levels every day. Spend like an hour doing it. So, easy enough. I do it every day with my mentees all the time, and I trade off of these levels. That's the first, most easy, most basic step. Draw major levels. Second step, wait for the price action to get to that level, right? Very important to wait. So you don't have to take an entry in the first 2, 3, 5 minutes, 10 minutes, whatever. Wait, yesterday, it took me like 35 or 40 minutes to get an entry because nothing went to my levels until that time frame. So okay, I wait for it. And then there's 3 possibilities at the level. One is it bounces off the level, the other is it breaks out of the level, the other is it gets stuck at the level and doesn't go anywhere, right? 3 possibilities. Now, I have 4 specific setups that I can trade that I will share with you today. And you have a retest of a breakout. So one is just it breaks through the level, it retests the level from the other side. And then it goes, and I'll get into the details of that. The other one is a reversal pattern, which is top or bottom, right? And so only if it's a good quality double top or bottom, then you take it as a reversal. And again, I'll show you more examples now. The other one is another reversal pattern, which I call major hammer tails. And you don't do them after giant candles, which I'll show you screenshots now. The hammer tails are interesting because that's also a breakout pattern. Yeah, I'm going to get into a few of those. And engulfings, I call it serious engulfings, which are reversal patterns. So multiple things can happen at a level, but there's only four uh, patterns I'm looking for. I'm talking about candlestick patterns. And I typically look at them on a 5-minute chart, and I found tremendous success with it. So I'll share those with you. Okay, so first step, draw major lines. Second step, wait for the candlesticks to get there and do one of the patterns you like. And I'll show what those look like. Step 3 is an odd one. Look to the left of your chart and ensure there's lots of room. What that means is you want to trade it at a place where the price hasn't been in a while. It's rare that the price goes there, and so what that means is the market does not usually stay where it has rarely been. I mean, the market's telling you, I don't trade here normally. I'm here now at this particular price. I haven't been here in a long time. Well, there's an indication that it's not likely to stay there very long. So I like to look to the left of the chart, just see if there's room there. It hasn't been here in a while. It's not been consolidating here for the last hour. Okay, there's room to the left, right? That's a very important piece of this puzzle. And again, I'll show you more. I'm going to show you a lot of examples now. Step 4, wait for confirmations, a new high and a new low. Again, off of these patterns we talked about in step 2. After the patterns are formed, you're waiting for, if it's a long, you're waiting for a new high. I look for it on a 5-minute chart. That's my entry. If it's a short, on a 5-minute chart, looking for a new low, new 5-minute low, that's the entry. And the whole point of that is you want to ensure that the market is going in your direction before you put on the trade, right? So just waiting that extra minute to get a confirmation has tremendously increased my win rate. I can't even tell you, it's tremendous. So I think my win rate was like 20%, now it's closer to 50%, right? And on just this one factor, step 4, waiting for the confirmation of the setup. Really interesting. And of course, we already talked about don't enter if there's no good risk to reward on your side. Very important. Okay, this is a 5-step process. I'm going to walk you through all of them right now and show you visuals, and they're very simple. I can't make trading simpler than this. Quick questions. Let's go through them real quick. James, explain 3. Yep. Step 3, make sure that there's plenty of room to the left, as in on the left of your chart, that's previous in a timeline, right? You're looking at the last 30 minutes maybe, or the last 1 hour. Just make sure that the price hasn't been there. That's the whole point. And I'll show you visuals of that right now. Carl, hotkeys, yeah. At the end of this presentation, I'll share hotkeys if you like. No big deal. We've got plenty of hotkeys. Actually, I don't even use them anymore. Not at all. Angel, what is the price? Is right at the level at the open? Well, still, Angel, if it's at the open, then wait for the pattern to set up. If it's a 1 candlestick pattern, okay, wait for that candlestick pattern to set up. My candlesticks, I look at 5 minutes. So it takes at least 1 candle. Usually it takes 2 candlesticks. So I rarely trade the first 10 minutes. Rarely. I'm waiting for the pattern to set up, and it set up any time of the day. I just don't like to take it in the last 1 hour of the day because there's not enough time for it to run for that 5 hour. That's the only real restriction. So it depends on what time frame you're into. I just draw levels on the daily chart and I look at 5-minute candlestick patterns. Right? Cool. All right. Hardeep, no PDC, no nothing. This style of trading, there are no pre-marked levels, highs and lows, all-time highs, whatever, nothing. No moving averages, nothing. I'll show you that. Here we go. So here's one example of a trade not long. I think this was yesterday. Yeah, this was yesterday. Look at this one. So on the daily chart, these green lines, these are the levels I picked. Okay, the price opened up here. It broke out of my level, right? I like to trade breakouts of a level, great. It was up here hanging around above the level, then it closed below, strong candle, breaking out. I don't trade the breakouts, right? I wait for the retest. It never came back to retest the level, the area, so there was no trade from me. All right, let it go. Then it goes all the way to the next level. Well, this is interesting. It gets there, indecision, and look at this candle. This is interesting. The low of this candle is lower than the previous one. The high of this candle is higher than the previous one, and the close is near the top. I mean, this is super bullish, as well as it engulfs the entire previous candle. Can you guys see that? Right at the level? Let me know if you're not seeing the cursor. I'm trying to explain it to you without the cursor. That would be weird. But, all right. So, this is an engulfing setup. Okay? Right here, right at the level. And you can see these are 5-minute candlesticks. It takes like 10 minutes to form. Okay, so the setup is complete. I got the level, I got the price to come to that level, and then I got the candlestick pattern to set up. So what's next? As soon as that candle closes, you enter the next, at the open of the next? No, absolutely not. What you do is you wait for the new high. The high of this bullish engulfing candle, that's the end of the setup, right? When you get a new high, that's when you enter. And I entered right there. You can see it on the options chart, actually. These options are really tricky because the spreads are really bad. But basically, when it makes a new high off of that engulfing candle, that's what I'm taking the entry. And the stop loss is below the level, or you can even put it below the candle. Depends how aggressive you are. The target, the obvious target, the next line. And on the way, you can look for obvious round numbers. I found 560 to be the obvious number on the way. So what I planned for was I'll take that trade, put a stop loss below the level, and it'll be like 8R or something if it gets to the next target. But as long as it gets to 560, I know I'll be taking profits there. That's already about 4 or 5R. And if it continues, great, 8R. That works out. So it turns out it's got to 560 and I took my profits there. As it turned out, it continued yesterday. This was like 10 p.m. for me. I was already tired. I'm like, wow, I should just shut it down. But if I was doing it correctly, I'd have taken some partials at 560, maybe half the position, and let the rest go for the next level, about 562. That's that. That's how you get big RVR. And remember, these are 5-minute candles. So from the open, the entry happens at around 10:30. So 1 hour of sitting and waiting. And then after you get the entry, about 30 minutes later, it gets to an intermediate target, 560. And then, I don't know, late in the day, it finally gets to the target. So really, if you did this correctly, you'd be holding this for 2 or 3 hours. What are you going to do for 2 or 3 hours? Are you going to sit and watch every 1-minute candlestick and drive yourself nuts? It goes for you, you take profits. It goes against you, you take profits. It goes up again, you add some back in, and now you're just messing the whole thing up. And then you end up break even, and then you send me an email, I can't get this to work. Oh, shit, here we go again. Typical, so typical. Just let it run. Again, your trade plan, your strategy must have a very specific criteria for entry and a very specific criteria for exits, right? I'm using levels, just simple flat levels. This strategy I'm showing you today is only one of many I've used over the years. This is the one I'm using now. It's definitely the most evolved and most simple and most profitable strategy I've ever had, and highest win rate and highest RVR value as well. So very important. Anyways, got many more to go through. So let's go through a few questions here. How do you know with conviction it's going to go there? I don't know it's going to go there, Tarbash. I have no idea it's going to go there. Only if it goes to the level, then if it sets up, then I'll put on the risk. And here's the key point, risk. Which means is I don't know for sure if it's going to go in my favor or not. That's why I have a stop in place. If I was 100% confident it's going to go, I would go full buying power every time, no stop, and let it go, right? Again, remember we talked about win rate, coin toss? The truth is you can't control what happens after you enter. You have no idea. None of us do. It's always a coin toss. But what you can do is wait for a really good setup, calculate your risk, put on the risk, make sure you stop out if you have to stop out, if it hits your stop price. And if it goes to your target, make sure you hold to your target. Those are the things that you have in your hands you can control. The things you cannot control are what happens after you enter, or what happens if it never gets to your entry or never gives you a setup. You can't control those things. Don't even try. Don't even try. Just don't. There's bigger forces at play that are beyond our hands, okay? So very simple. All right, next one. Okay, here we go. So let's talk through this. This is where it gets interesting because this is the stuff we did not discuss in the previous webinar a couple days ago on the strategy. So NVIDIA, levels, right? Levels in play, horizontal lines on the daily chart. Let's go through levels real quick. I'm sure I'm seeing a few questions here. Looks like you guys have level questions. This is an obvious level, this line where it is. See it pushed up, resistance, resistance. One day it happened to break out, then that resistance turned into support, then it did a breakdown, then it broke out again, but I mean, this line is firmly in play. So it's been on my chart, okay? That's it, nice and simple. So on this day, the candle opened up here, went down, there it is. Happened to have got to my level. Fair enough. Happened to break out of the level, okay? It went up to the level, but never really pushed down from there. So it's not a retest, it's a failed retest. And then it goes up. It breaks back into the level. Anybody see a setup here on this 5-minute chart? Anyone see where would you enter? Just kind of throw it out there. It's a bit of a quiz. I purposefully did not write anything on this slide. Let's see what you guys think of candlestick patterns at levels. IG, no, I know PDC close for me. Hassan, you say 10:30 you'd go long. Okay, on this big engulfing or big candle. Okay. Dave, you'd go long 144. Zach at 143. Okay. Okay. Higher high after the engulfing. Kim, you seen engulfing? I don't see an engulfing. Cool. All right. You see shoulders, guy, tweezer bottoms, hammer with a tail. Yeah, yeah. Okay. I see that. I see that. I understand what you're talking about. Ramesh Venu, I go in the money that avoids the time decay problem. Alrighty. Yeah, yeah, everyone's got an idea. Some people want to take it, some don't. Most of you want to take it. Wow. Okay. Those of you who went long obviously made money, right? Cool. Yeah, but I didn't take this. You know what? There's no setup here. It went, sure, but there's no setup. Just like today when I was trading, I was watching, I think Tesla, there was no setup. Well, what I mean by setup is look, this thing went down and approximately in the area 144, 143, right down there. Yeah, it had a bullish hammer. But this is not one of those major hammer tails. Remember, here you are trading naked. You're trading with horizontal lines and candlestick patterns. Your candlestick patterns better be freaking perfect. You don't have no moving average or Bollinger Band or RSI or anything else to give you confirmation, or a moving average crossover with an arrow and then the chart turns blue, whatever. You don't have any of that. There's nothing here. Okay? So you have only one thing to work with, which is candlestick patterns. That's what's telling you the price action. And if you don't have a perfect pattern, don't take it. This is 80-20. You're not mixing up 10 different indicators. You got one indicator, which is a 5-minute candlestick, and a candlesticks in combination. So 2 or 3 or 4 candlesticks in combination, that's a pattern. I don't see a single pattern here. Somebody said tweezer bottoms. These are not tweezer bottoms at all. These are dangerous ones, because tweezers are when the wicks are in exactly the same place. Those are the best ones. This one, the second bottom is actually lower, so it's not very encouraging. And this is not an engulfing either, because the high of this bullish candle does not go above the high of the previous red candle. It's not engulfing. It's not a double bottom, obviously. You don't see any of that stuff going on here, right? Yes, and it went long, but I did not trade this very purposefully, because it doesn't have any of those 4 setups I mentioned. There's nothing here. There's nothing here. Yep. You see a short, Salim? Yeah. Well, for a short, you want to break out, retest, and I'll show you examples of retest, but what a retest truly is and when is it confirmed. Remember I was telling you earlier? Wait for the setup, then wait for the confirmation of the setup, and get in, and then your win rate is 50%. I don't see any setup or confirmation here. This is a real no-go. Absolutely not. I'm putting this out there as an example of what not to trade, but a difficult one because it does go in your favor. For the shorts and the longs, right? I mean, what brilliant price action. This was yesterday, I think. Right? Yeah, we'll get into the levels. Don't worry about it. We got plenty of time. I'm going to pull up the live market today after this presentation and share the screen, and we'll go through levels. No problem at all. So, no setup here, and I'm going to show you what a good setup looks like here in a moment. Okay, this is Tesla yesterday. All right, so levels again. We know what levels are. So horizontal green line over there. There's another level down here, right when I took the screenshot. First candle, pushed up, reverse hammer, right? New low. What do you guys think? If this makes a new low after that reverse hammer at the level, that makes sense. Take that short, stop loss right above the level or above the hammer. Your next target is 136, right down there. Makes sense. Pretty obvious, right? Short right off the open. Fun day. You're done in 30 minutes or 1 hour. Great. Yeah, this is a $20,000 trade for most people. I mean, this is huge. Look at this thing go. But no, I didn't take this. It's not a good setup. Because again, look at this hammer. This is an interesting one. I want the tail of the hammer to be twice as long as the body of the hammer. And I want the body of the hammer to be in the 1/3 of the candle. In this case, the bottom 1/3 of the candle. And I don't really want to see a wick on the other side of it. This is closer to a doji than a hammer. And a doji is a matter of indecision. Yes, it did go short, but it was a risky, dangerous one. Very risky. You know what would have happened for most of you guys if you got this? If you entered the new 5-minute low, it would have hit 340, you would have seen big liquidity or something down there. You would have seen this candle go up. You would have freaked out, taken a partial. Next candle, you're out at break even. And you would have missed the whole day. I'm not saying you, anyone in this room, but I've seen enough people trade. So, and I've seen myself trade too over the years. Done the same newbie mistakes all the time. The reason is this is not a truly bearish candle. Even though it looks bearish, it's a real teaser. It's making a new low, but I'm telling you, this is what you call a teaser. Because then it would have messed you up, stopped you out, screwed with you, probably chopped you up a few times, going long, short, trying to make up losses you didn't have or whatever. And how many of you guys would have had a losing day over here in the first 30 minutes? Everybody in this room. I'm sure of it. 3 years ago, I was getting chopped up on this as well. So it's not a good setup. Even though it looks like a nice hammer, it's not a major hammer tail. Again, remember, on this strategy, you're looking for perfection with your candlestick patterns. Otherwise, do not touch it. Because you don't have any other thing. You have nothing. Look at these charts. You're absolutely naked. You're absolutely exposed. There's nothing here to work with. So make sure your candlesticks, the one single thing you're focused on, the 80-20 thing that you are doing, make sure it's dead right. If it's not there, don't take it. It's not worth your money. You're giving your money to the market for free. What the hell? Don't do that. John, yeah, I'm on 5-minute charts. Absolutely. Now take a look at this thing. It pushes down. At the bottom here. Now that looks like a good hammer with that a serious tail. Look at the body right up at the top of the candle. The wick is just massive compared to the body. What do you guys think? Long, short, no trade? Anyone? No? Yes? ID, long, Gert, no trade. Hassan, no trade. John, long. Samir, yeah. Nice. Yeah, tricky, yeah? Well, let me tell you a secret. If you look at my Twitter, or X these days, I took this trade yesterday. After this thing closed, this hammer, then the new high, I took that trade, entered on the new high, basically at the top of this big red candle. And the stop loss was, I think, below the level or just below the hammer, somewhere there. Looking for the top, 345, even 340 on the way. And the truth is, it's a decent setup. Corey, it has nothing to do with volume. We're not talking about volume here. No, I should remove these volume bars because they're irrelevant. But look at this setup. It's actually pretty good. This is what you want to see. This hammer, this is a single candlestick pattern, but you got to look what happens before. What's good here is it doesn't happen immediately after a giant candle. If you look at this big red candle, and if the hammer happened immediately after that, then it's a no good setup. You got to let that big giant candle close, then one or two smaller candles. You have one right here, good. Then the hammer, all right. Then the new high, all right, take that entry. And here it didn't go all the way. This was a partial trade. It got to 340. I took some partials and I was out at break even. So it only went halfway or 1/3 of the way to my target. But I was out of break even, still profitable, break even. But I'm very satisfied with it because this setup was good. And here's the big one. When you're done trading after the end of the day, whether you had winners, losers, whatever you had, end of the day, you got to ask yourself, was it worth it? I took that stop out, but was it worth it? Was a setup there, or did I chase it? Or what was I seeing? Was I revenge trading? What was I doing? Was it really there? Was I focused? Did I put it on the right way? Did I put the right amount of risk? Not too big, not too small? Was it worth it? If your answer is yes, then okay, that trade goes in your journal. That deserves to go in your journal. Okay, it goes into the statistics of you lost one trade. Fine. But you did everything correctly. Right? Yeah, hallucinating. Yeah, no more mushrooms, Hardeep. No more. We're not doing that. So, and even on your winners, because a lot of times you have winners. Like on that previous slide, you guys would have taken Nvidia long and stuff. Well, there's no setup there. It was not worth it. You're building bad habits by having winners on poor setups. You're not going to last long in this business, I promise. I've seen enough traders blow up. You're not going to last long doing stuff like that, right? So you have to answer that to yourself at the end of the day, and only you can answer that to yourself. Somebody else that asks you, you can come up with any answer you want in the moment. But in the end of the day, you know what you traded and why. And whether you chased it or overtraded it or revenge traded or whatever, you answer that to your own conscience before you go to bed. And then you'll see how well you sleep. It really does define how well you sleep. So setup here was good. Enter the new high. I had no problem putting on good risk on this. Stop loss right below the entry or below the hammer. I can't remember. Take some off at 340. As it came down, I was out of break even. Done. That's the exit. The IG was just break even. If it ran, great. It would have run. It would have been another 20K trade or something because I put on size on this because it was a good setup. Again, you're waiting for the setup. Always waiting for the setup. Tata, I don't watch the Spy. No interest in the Spy. All right, here we go. NVIDIA. This is a good one. I took this one as well, but I didn't get a good screenshot of it. I don't know why. This was also yesterday, or 2 days ago. Here's a really simple setup. Again, horizontal lines off of the daily chart, and we'll go through that soon. Look at this one. Opens down here, breakout, retest, and goes. All right. So the retest, we already talked about breakout, retest, how that works. Somebody tell me, when do you enter? When are you confirmed and sure of the retest to the level where you are willing to put your money at risk? Anyone got any? Dave at 142. Okay, Zach again at 140. Zach, you're aggressive, huh? Close above the level, John. So just waiting for a close. Okay, IG knows this one. Yeah, you guys are here on Tuesday, right? Half of you for the webinar. I should remember this stuff. It's like a quiz today. Hassan 11 a.m. Whoa, it's already gone to the target 11 a.m. I'm talking about this level, this 142 level. 142. All right. All right. Again, key point. You don't have any VWAP or moving averages or anything to tell you that it's extended or it's ready to go. It's close to the moving average or whatever. You have nothing. Look at the chart. It's freaking empty. There's nothing here. So the trade book on this sort of stuff, on this strategy is wait for it to break out. Wait for it to get to the level and push up above the level. Then, when it closes a bullish candle pushing off of the level, so you can see this white one, that's the first genuinely bullish candle pushing off of the level, off of the area. And then you wait for the new high. Now the next candle turned out to be this hammer, and this is a perfect hammer. One of those long-tailed perfect hammers I like to look for. That still didn't make a new high off of that previous bullish candle, so you're still waiting, okay, for the new high. And you see the next candle, it makes a new high. So you're entering basically in the middle of this white candle. If you guys can see the cursor here, you're entering the middle of the white candle. That's the perfect entry. Stop loss right below the level or right below the candles. You're going for the next level, and that's that. And then if you have conviction, hold on for a little more. If you get more than that, it's all bonus. You can even add in if you have conviction it's going to continue. This thing could have held it all day. I think I got out the majority here at this level and then held some for later. I can remember now. It's a few days ago. But you see the setup. On these retests, it has to break out, it has to retest, and then go in your direction. Close one candle in your direction. In this case, a bullish candle. And then make a new high. That new high is your entry. You can do it on a 1 minute chart, 2 minute chart. I like the 5 minute chart. It gives me a lot of conviction. It's a big time frame. And I'm willing to wait. No big deal. I'm willing to wait rather than go in too early and lose 20K in the first 30 minutes and then have to fight my way back. I'm done doing that. My days of doing that are behind me. So I'd rather do it on a 5 minute chart. Nice and easy. That's the confirmation. You have the breakout, the retest. That's the setup. The confirmation is the new high. Right? V, now this is not officially being recorded. Hassan, it doesn't, I think about 70% of breakouts do retest. But even a retest, it could just be a false breakout, go inside, right? That's why you're waiting for a candle to close bullish in this case, and then a new high off of the bullish close, which is telling you the market is moving in your favor before you enter, not after you enter. You want that confirmation, right? Remember, confirmation increases your win rate. My win rate went from like 20% to 50%, something like that, just on waiting for confirmations and going on a 5 minute time frame. It's crazy, right? Simple things, big difference. Samir, yeah, no trade, because you don't trade breakouts. This strategy is not about breakouts. This is naked candlestick trading. This is not momentum trading. You want momentum, then you trade breakouts, and then you need to have the VWAP and the moving averages because you can't get into it when it's extended. Then you're looking at the tape. You got to read the tape, read the volume. Make sure you get out when the momentum is not in your favor. You don't want to go and sort of try and wait for the pullback retest and all that. You're scalping in and out. 2 hours is the best trade you can get. That's very typical. That's if you read momentum really well, which most people don't. Very hard stuff. Most people just don't. Jordan, yeah, patience is important, Jordan. Don't even start with me, man. I lost I don't know, feels like $1 million just trading 1 minute charts. Feels like it. What else we got? Avi, what gives you conviction that it's going to continue? What gives me conviction? I have no conviction. All I have is a setup and a target. What happens after I put on the trade is none of my business. I don't control the market. Even the market makers don't genuinely control the market. You could say manipulate, but whatever. So no, I have no conviction it's going to go anywhere. That's why I have a stop in place. Okay, it's simple enough. I don't control the market. I have no idea what's going to happen after I enter. You never know. If you think you know it's gonna, you're guaranteed, you're sure it's going to go because the setup was perfect. Well, you're fooling yourself and you're setting yourself up for a Hulk day. If that's your mindset, you're screwed. You shouldn't be in this business. Go to Las Vegas. You're better off there. You probably make more money on the blackjack, or something. Angel, explain how you define genuinely bullish candle at the retest point. Yeah, so here, the first genuinely bullish candle is this white one. You see it went up, it pushed down two red candles, and then you see the white one where the close is near the top of the candle. Then the next candle, it's red, but it is a very bullish candle. Can you tell me why it's a bullish candle? The open and close are basically the same price. This thing could have printed white for all I care. This actually two beautifully bullish candles right at the retest zone, the breakout zone, and then the new high. And then you make $100,000. And it's worth waiting for, right? Is 10R worth waiting for? If you can't wait 30 minutes to take a 10R trade, again, I'm in the wrong business. What else we got? I'm missing these questions. No, JC, no level 2 for me. No tape, no level 2. Not even volume bars at this point. Dave, the first confirmation will not be the first candle. No. You wait for the new high. In this case, the new high for the confirmation. Then you enter after confirmation. If it's a short, you wait for the new low. That's why you saw me trade this morning, right? I didn't take Microsoft. Beautifully short. I didn't take it because the confirmation candle was just too close to the target. So, okay, let it go. The market is a gold mine. So many opportunities, man. Come on, guys. You can wait. No big deal. It's worth it. Jack, to trade, then would you take the next one? Jack's an important thing. That's a very good question because that's more about psychology. You got to realize that one trade is not related to the next trade. Ever. Never, ever. Just because you missed one, you're waiting and jumping into the next one? No way. No. One trade is not related to the next. One day is not related to the next. You have to be able to compartmentalize day trading. You saw the losses I took earlier, right? It was like $20,000 losses. I mean, I trade every day with my mentees. Ask them, they've seen me beat down $30,000, $50,000 in a day in the space of 3-4 trades. But I still trade another trade if the setup is right. Compartmentalization, that will keep you sane. Otherwise, you're going to end up hitting your head against the wall intentionally. Okay? Compartmentalize. Do not trade one trade because of something that happened on a previous trade or a setup that you missed or what. That's, again, a very amateur. That's why we have such a high failure rate in this business. People can't overcome these mental hurdles. It's not about the technicalities. It's really not. 80-20, 80% of it is psychology, really. All right, yeah, there you go, James. Cool. All right, Deep. Sometimes while you wait for the new high, if it pushes too high from the level of entering, the point becomes the price come down level. Yeah, well, you put your stop loss at a technical place, right? Doesn't matter how high you enter. The only thing that stops you from entering is if risk to reward is not, if it's already gone halfway to your risk, halfway to your profit target area while you're waiting for confirmation. Well, at that point, it's not worth taking. You waited, but just happens to give you confirmation way too late to the point where it's almost at the target now. Don't take it. It's not worth it. Remember RVR? Keep your winners bigger than your losers. Let it go. Remember, guys, all these questions that you're asking are all FOMO-based questions. All of them. You got to remember that the market is a gold mine. I'm telling you, I only watch 8 tickers every day, and they're the same top 8 tech stocks, and that's all I ever watch, ever. I don't touch anything else, and I find like 30 opportunities a day. It's kind of crazy on this strategy with no indicators, just horizontal lines and 5-minute candlesticks, and I'm going to take the volume bars off too pretty soon. The market is a gold mine. I could do this on 3 tickers. On my laptop when I go to Colombia next week, I'll probably just watch 3 or 4 tickers, and it won't matter. David, I'm watching the Mag 7 and AMD. And really, I just kind of get NVIDIA and AMD every day, or Tesla, maybe 3 of them. That's it. There's no need to go chasing the market. There's no need to go hunting down other stuff. You need those catalysts if you're trading opening volatility. This is not opening volatility. This is a very simple trading style that you just have to sit and wait for the entry, then wait for the target. And if you can't handle waiting, and go watch something on YouTube and put an alert on your screen or on your computer or on your phone. When the price gets there, it'll buzz on your phone. Go take a look and see if it if it sets up and gives you confirmation. Then take it and then go away from it. Set up your orders and go. That's how my trading got bigger, much bigger. That's how my win rate got bigger and my RVR factor. Very important. All right, let's move on. We got a lot of examples, so let's get going. Okay, real quick, easy one. Look at this. Level here, pick out the level. We'll get into level soon. Breakout, retest, new high. I'm entering at the new high, stop loss below the level, below the candle. On your way. How much easier do you want it to get? I explained the whole thing to you in 5 seconds, right? John, I don't watch SMC. I have no idea what's going on with that. So you can see, here's the entry. I'm just doing it with options. You can stocks, it's all the same thing, really. Stop loss is below the consolidation, so below the level there. If it dropped below, I would have been stopped out. And then you're off for your targets. That's it. The target in this case, I had 205. I think it did go to 205 on this day. I had 203 as an intermediate target, and I don't know what happened. Oh yeah, I was doing the webinar. This was Tuesday. I was doing the webinar, and I couldn't watch it or something. I had to just take it off. Again, this was not a trading decision. This was more about a distraction decision. I had to take it off. Well, it was fine. It was still 8K. I mean, if I really let it go, it would have been 25, 30K. It would have been a proper trade up to 205. You can see the setup. You can see it. I mean, it's just right there. And on the horizontal lines on the chart, yeah, just 205 is the target. So 205, nice round number, right? The hard part is sitting on it, as in putting it on and not watching it, walking away from it. That's the hard part. But really, I gotta say, man, the professional traders, this is how they do it. This is how they make ridiculous amounts of money per day. I'm talking multiple 6 figures in a day on multiple trades. They wait for the entry, then they let it run. You ever heard of prop firms on Wall Street? That's what these guys do. And we're here screwing around with the VWAP and stuff. I mean, come on, guys. I learned this the hard way. I'm hoping to just share it with you so you don't have to go through that 5-year learning curve that I went. Mr. Vims, thanks for joining, even though you're late. But no, it's not being officially recorded. John, how many minutes to wait? No, wait for the candlestick setup. Forget about minutes. Forget about number of minutes. Wait for the candlestick setup. Look at this one. My entry was like 30 minutes after the open or something, 25 minutes. And it's just based on, look, the candle broke out of my level. It retested the level. The first genuine bullish candle was this big white one right here. It was near the top. Then the next candle made a new high. Looking at it in hindsight, I actually entered at the high of the day at the time, which is kind of crazy, but okay. The stop loss is below, and the target is further out. Then all you do is don't watch it. That's all there is. Look at this thing. I mean, this was a good trade. A little unsatisfying. Took it off too early, but you know, still works, right? NA, the stops are based on price action on the chart. These are options. I'm not even watching the options chart. It's just telling me that I got in and got out. It's not telling me anything else. I'm watching the price action on the 5-minute chart. And I'm only watching it at level. If it gives me a setup, I'll take it. If it's the target, I'll take the profit. And that's all there is. There's nothing else to it. I mean, it just is drop dead simple. And I'm telling you, this is how the pros trade. They don't go chasing the stock in the first minute or the second minute. They just don't. The professionals do it this way. I'm talking about the big money, and there's a reason for it. All right, example here, AMD. Anybody see a setup? You got the lines on the chart. You got the 5-minute chart candlesticks. Anybody? Throw it out there. Tell me what you see. Good exercise. Goose, I'm not looking at options at all. Not interested in that. David, I go slightly in the money just because I want to hold through pullbacks. I'm working with intrinsic, not extrinsic, avoiding time decay. Yeah, David, yeah, it's all in the money stuff. All right, James, 10 o'clock reverse hammer. Okay, I see it. Anyone else? Is there a trade here? Is there no trade? Is there a long or short? When? No trade, you won't trade. Range, high, hammer. Okay, I see it. Don't see a setup. Yep, no trade, no trade. Looks sideways, yeah. In hindsight, it looks sideways, right? Good. We're getting a lot more correct answers now than we did like 20 minutes ago. Wow, I'm getting somewhere. Good, good, good. All right. I don't see a trade on this either. Why? Yeah, Naveed, room to the left is one thing, but that's one thing. Look at this. This first candle, major hammer off of the level. Perfect. I mean, why not enter on the new high? I mean, this is brilliant. Why not? And put the stop loss below the hammer there, as we always talked about. Yeah, RVR sucks. There's nowhere to go. Precisely. And this is actually a very good example of what keeps me out of trading the open. So it's not about number of minutes. It's typically because the candles are just so big at the open, the 5 minute candles. The first two candles are just not even a part of my setups. Because they're so big, I have to wait for smaller candles to start forming at the level, then I can get some good RVR, and I take my entries maybe 30 minutes after the open or 20 minutes after the open. Then I get my first good trade. So yes, no entries of no good RVR. Look what the next target is. And sure enough, it goes from one target to the other. Boom. Done, right? And someone said, yeah, reverse hammer here goes short of the new low. Well, you know what? This does have room to the left. Yes, it does. You can see it. That's good. But this big, perfectly shaped reverse hammer happens immediately after a giant candle. It's no good. This is no good. You gotta not have this big reverse hammer after the giant candle. If there was at least one small candle sitting there, then the reverse hammer and it has space to the left, then I'd say, all right, now the short looks good at a new low, you're going back down to the next level. But none of that happened. This still has, with the giant candle, you still have momentum going up. Just because it did a reverse hammer doesn't mean it counteracted all the momentum on that previous candle. Very, very important, right? This giant hammer thing, tricky one because it's a single candle setup. So you need to really make sure it's really good. So there's a few little nuances you got to know about. One is space to the left, like we've been discussing. The other is make sure you don't take it after a giant candle. If you had taken this short, it would have been stopped out. Simple as that. Look at this one. This is not a giant hammer. The tail is no good. If the tail was twice as long, maybe then I'd say at the new low, maybe. When it's not even in the zone. I mean, look at this. The zones are here. This is like in the middle. So no. Even down here. See this hammer? Now this is interesting because there's room to the left. Hasn't been here in a while. It happened a few candles after a candle. Okay, so that's qualified. But the problem going long here on the next hammer or the next high is it's not close to your level. It's closer to the middle of the level. And sure enough, it didn't go anywhere. It would have just messed with you. It would have totally messed with your psychology going long and then holding through all this. And what's your target? Up here? It would have stopped you out. You would have lost money. And this is not a good setup. This would have been a FOMO trade if you took it. There's no setup here. Absolutely nothing. And you can see nothing worked either. Right? So these are things to be careful of. Again, it's easy because it's a 5 minute candlestick and it's so much time to sit and watch. You can sit and watch this. And your checklist is only like 3 items. Make sure there's room to the left. Make sure it's not out a giant candle. And wait for the new low. That's it. And oh yeah, of course, make sure it's at a level. Don't trade when it's not at a level. At a daily level that you put on your chart. Very simple, right? Roberto, we're going to get into levels. We haven't done that yet, but it's on the daily chart, and I'll show you how we do that near the end of this presentation. Okay. Yeah, AMD, real time, you're watching it. We'll watch it after this, all right? All right, here we go. Microsoft, another one. Anyone, any setups? Let's get through this a little faster. You guys are getting a little more proficient here. Anyone? Andrew, enjoying this? Cool, man. Good fun. I'm losing my voice, man. I'm on the mic every day now. Anyone, got a setup here, got a trade here? Tell me. Otherwise, I'll have to tell you. What's the point? JK, this is not an options webinar. We'll get into a few options things. Let's get through this first, and then we'll go off on these tangents. Yeah, no trade. No trade, right? You see a perfect hammer. I mean, look at this. It's beautiful. But look at that. The target's right there. What are you going to go? Get the new long? Put a stop loss right below? It makes no sense. And look at this. This hammer is nowhere near a level. I mean, the level's up there. So there's no trade. Then what? You're looking for a breakout. Okay, breakout. What, does it retest? No. It doesn't bounce off the level at any point. It comes back to the level. Like it breaks out, comes back to the level, but no bullish candles closing above the level, bouncing off. Nothing. Absolutely nothing. And what? Do you see anything here? You see a hammer here? Yeah, this is a good hammer. It's got some room to the left. After that, a new high. But I mean, look, you're going straight up into the level. And look, this is not at your level. You want this at your level. If this hammer was happening in this area, then I'd say, oh, that's interesting. Then you got to look, is there room to the left? Is it not just caught up in noise? These are the things. Again, very simple. Look at the chart, 5-minute candlesticks. It's at the level, but there's no setup. And of course, with no setup, there's no confirmation of the setup, obviously. So no trade. Let it go. NVIDIA. Anyone, any setup here? You're getting the hang of this now. You guys are going to keep me up all night. Any setup, any trade. John, reversal doji. What is that, second candle? Okay. Hassan, no setup. Kiss method, yes, that's it, Jordan. Third candle, no setup, no setup, no setup. All right, cool, cool, cool. Yeah, some of you are getting FOMO, huh? You want to go long on the third candle? Really? Really want to go long? Okay, let's work this out. Let's say it gets to this level down here. You see this beautiful hammer. This is a perfect hammer, right? New high. Okay, you take the new high. Where's your stop loss? Below the handle, below the hammer. Where's your target? Up there. You're barely getting 1.5 to 1. Just on that, it's no good. Secondly, it's happening after a giant candle. And there isn't really much room to the left. It's just kind of been chopping up and down in this area just in the opening few minutes. And just before the market opened too. There's so many reasons you don't touch this. Again, you don't have any other confirmations. You're purely simply looking at candlestick patterns. You have nothing. Nothing else. So don't screw around with your candlestick patterns, man. Don't warp them and mess around with them. They have to be precise. There is nothing there. I look at the 5-minute chart. Yeah, this one's on a 15, right? But really, I've seen the same patterns. I actually brought this up because I wanted to show this pattern. This is an important pattern. It's the same pattern. You'll see it on the 5-minute chart. Same thing. All right. So yeah, no trade on this one. When you see a pattern like this, for good reasons, you're not taking this. No way. And there was no setup. I can't see anything. I mean, I'm straining to look for a setup. There's nothing here. Even here, reverse hammer, new low, but really it happened after a pretty big candle. Right? It's a decent reverse hammer, and it made a new low, and you got room to run for the stop loss right above. But this big candle here would have stopped you from entering that. 7th candle, which one? 1, 2, 3, 4, 5, 6, 7. Breakout. You want to trade a breakout? I'm not trading breakouts. I'll trade retests of a breakout. It breaks out. But where's the retest? Where? I don't see anything. This retest, this is in the middle of the range. Somewhere in the middle. It has to be close to the range, close to the zone. That's important. Cool. All right, next one. Oh, this was a fun one. This was last week. I remember this one. All right, let me walk you through this one. Some of you guys would have remembered this from the webinar a few days ago. Got the 5-minute chart, got the levels, picked them off from the daily chart. Over here, you can see breakout of the level, goes back to the level, retest, first bearish candle, confirming the retest, telling you the retest setup is complete. Then the new low, confirming the setup, that's your confirmation for entry. New low, stop loss right above the candles, or even above the entry candle if you like to be aggressive, or above the level, making sure one way or another you're getting good RVR down to your target. There you go. Straight up and simple. I'm not trading the breakout. I'm trading a confirmed retest going short. And over here, next level, what happens? Breakout, goes back into the zone. First bearish candle telling me it's starting to reject the zone. Entering at the new low, stop loss right above. That's me taking that entry, going for the short, all the way to the next level, which is right about 330. That one worked very nicely. A lot of patients waited till about 2 o'clock in the day to take that short. That was about, what, 11K on that one. And here's another setup, happened immediately after. Look at this. This is a big engulfing candle. The red candle closed, the white candle opened, and pushed straight up, closes near the high of its own candle, totally engulfing the previous one. At the new high, that's your entry. Go long for the next target, for the back to the level it just came back from. Took this entry a little prematurely, a little bit of FOMO got me. Should have waited maybe 10 seconds more for a perfect entry on the new high. And off you go, and that was about 17K on that one. But these take time. For like 2 o'clock and 2:30 in the day to take the trade, and then wait for like 45 minutes to take the profits. All right? That's very important. Patience. Kim, you want to talk about the 2 o'clock one? Yeah, 2 o'clock, around 2 o'clock, see that it comes to the level, breakout, but it goes right back in. At this point, you don't know if it's a false breakout or what, right? After this white candle. But then it's got a bearish candle, and it's showing it's rejecting, it's pushing down. It's generally bearish, it's done a breakout, and it's pushing down. Oh, it's interesting. Now I'm really certain it's rejecting this area. And remember, these levels are not pinpoints on the chart. They're areas. Okay, they're zones. That's the hardest thing for a lot of people to get around. But again, join Carlos and Peter in the pre-market show. We're doing the levels every morning and talking about how they are zones, and you cannot treat them as precise things. Very important. And then after this first bearish candle, the next bearish candle, as in the new low is the short. That's the entry I took, which is right there. Plus, I think was right above the level, or I can't remember. Yeah, probably right above the level the way I trade. And go for the target. That's that. So there are three perfect setups late in the day. But all this started to happen after about 30, right? So what do you do first 2 hours of the day? Don't overtrade. Go make coffee. Go do something. Just don't overtrade. Here we go. Look at this one. High quality double bottom. First example of a double bottom. Okay, the levels are basically these black lines. Don't worry about the rectangular box. It's nothing. It's just horizontal lines I'm looking at. So Meta opened here, bounced off that bottom, right? Okay. Then it got back to it. And what's interesting here, when you're looking at double bottoms, you want the second bottom higher than the first bottom. It's telling you that the buyers are in charge. The sellers are able to make a new low. Very important. And then the first bullish candle, see the little white one? That's confirming, okay, that's the double bottom complete. Now you want confirmation that the market's going in your favor. Confirmation happens here. The new high is where you enter. I think my entry was just a little late, just a few minutes late. Still got the same entry. Stop loss right below it, and you're going up. In this case, 580 was the target and above. So I got up through 580. This would have been 6 or 7 hours, something like that. So now, yes, this happened after a giant candle, but you're not looking at a hammer setup here. You're looking at a double bottom here. Very different. Here's the bottom. Here's a higher bottom. And there's room in between. Remember room to the left? It's nice. It's got space here. It's not picture perfect, but it's nice. It's not just struggling here and chopping it. Oops, let's go back. It's got room in between. That's a double bottom, right? And off it goes. Naveed, I rarely add to my winners these days. If, like in this case, if I took it off at about 580, and then I would add above 580 if I'm thinking, okay, it might still go. At that point, everything I get is bonus anyway, so I just add and put the stop loss pretty tight. Oh, in this case, I did. I added after taking the profits at 580, and it's risk-free because the stop loss is at break-even, and that's the break-even. If it stops me break-even. I already got a decent trade out of it. Otherwise, get more out of it. No big deal. That's all there is to it. Hassan, lower bottom wouldn't work because it's telling you that the sellers are still in control. You want to find evidence that the buyers are taking over before you get involved in it and throw your money at the market. I mean, do you want to give your money away for free? If you're going to do that, just give it to me. You don't have to waste your time trading. Seriously. Do it properly. If you're trading, do it properly. Otherwise, you're just giving your money away, man. Seriously. Don't do that. All right, Microsoft. I like this one. This was a picture-perfect setup, and the execution was all right, too. So, horizontal lines. Again, don't worry about the box. It's just horizontal lines, black lines. Look what happened. Went up into the level. Retest. First bullish candle, right where my cursor is right there. Right? Almost precise retest of 422. Then the new high. The new high is the entry stop loss right below the level. That's the entry stop loss right below. You're going for the other side of the level. I had 425 on the way, so I targeted 425, obvious round number, and then the level. There. Profits at 425, and then at the level. And then, if I'm identifying some strength above, if maybe I'll get a little bonus out of this, I'll add in. And I did in this case, and I did get a little bit of a bonus. Got that bit too. And the rest is out of break even. Turned out to be a decent day. 5 figures. Does that make sense? Again, a perfect retest. We've been talking about the retest trade. This is what it looks like. I mean, take the screenshot if you like. This is what it should look like. Peter, can you talk about the difference in RVR with stocks versus options if it travels twice the distance stuff? Yeah, it's not a options webinar, but let's do this. Let's get through this, because if we go off on a tangent, everyone will lose their minds. Me too. So let's get through this, and then at the end of it, we'll go through some of these other questions that we can spin off into. No big deal. Dari, how do you identify strength above? Good question. How do you identify strength? First, you get a breakout. Then you get a retest. And with the retest, I'm looking for it to close one bullish candle, right? And which happens to be exactly the retest candle. Then if it makes a new high after that, that's me looking at strength. That's me looking at the market already going in my direction. And I'm entering as it's going in my direction with a stop loss below the level. And excellent RVR. So that's how you identify it. That's why confirmation is important. Again, confirmation, I can't tell you how important it is. It improved my win rate from something like 20% to 50%. Like, that's the amount of difference. It's huge, guys. It's huge. IG, yeah, after this, we'll get into the live market and do it all. All right, I showed you a bunch of trades and examples. And here's the hard part. Okay, all that was fun. Now it gets serious. You got to earn your own trust. See, everything I was talking about there is, firstly, you're trading naked. There is no other indicator but horizontal lines in your daily chart and 5-minute candlesticks. Did you notice I didn't even talk about volume or the tape or liquidity, level 2, book map, moving averages, nothing. There's nothing. It's gone. Everything's gone. It's just purely horizontal lines on the daily chart and then 5-minute candlesticks. Okay? That's a bit scary for most of us. And so you got to learn to trust it. You got to learn to trust yourself to begin with, that you're not going to spook yourself out, and then because you can't figure it out, you're going to suddenly add VWAP into the mix, and okay, maybe it makes sense. And then now you don't. Now you're not trading. Now you're just grabbing, at things in thin air. You're not trading. So you got to earn your own trust. And also on this, as much as you've seen the setups and the confirmations and how these work, and when not to trade also, like I showed you a few examples, when not to take them, that's very important. But you have to execute all that stuff. You have to execute all that. And how do you know you can execute? Well, you've got to trust yourself. You've got to earn your own trust to begin with. And how do you do that? Well, this stuff is all in the course. There's a lot of this psychology stuff. This is really important. How do you earn your own trust is by simply, outside of trading, say you're going to do something and then go and do it. If you do that regularly, what are you doing? You've earned your own trust. You're earning your own trust. You said you're going to get up at sunrise. You do it every day? Okay, you've earned your own trust. You say you're going to go to the gym and you give yourself a routine, okay? And every day, every time that routine comes around on your calendar, do you do it? Yes, okay, then you've earned your own trust. But it goes the other way. You put something on your calendar or you commit to doing something and then you do not do it, well, now you're going the other way. Now you don't trust yourself. And now you come to trade. I don't care how good your setups are or your RVR or how simple your trading strategy is or whatever, you're not going to be able to do it. You're just not. And I'll tell you, go find some other way to make money in this world. Forget about day. Just don't day trade. All right? So, earning your trust. Okay? You got to earn your own trust outside of day trading and then bring it to day trading. This is a matter of how do you conduct yourself outside of trading. This is a matter of being a trader, being a high performance person outside of trading. When you do that, then you show up to trade and you're going to kick ass. Really. This is how the athletes do it. They show up on game day. They don't just start training a week before. They live a high performance lifestyle. They're training every day. Their mind, their body, their skills, everything. Musicians, the same thing. You got to live a high performance lifestyle and bring that to day trading, because this is a high performance activity. And only then you can start now looking at levels and candlesticks, even the simple strategy that I shared with you today. You cannot do it until you are a high performance person first, as in conduct yourself that way in your life outside of trading. I cannot stress this enough. I talk about this with my mentees all the time. This is a big section of the course I put out there. It's very important. And I see people struggle with this all the time when they're trading. There's so many times I'm trading live with people and they're talking to me and I'm telling them, well, today they're just not fit to trade. They're all over the place. They need to take some time off, go sort their shit out, and then come trade. Very important. Very, very, very. I can't tell you, this is something we don't talk about enough. Everybody wants strategy, everybody wants leverage and options and in the money calls and whatever. You know what? That's the small stuff. That's the small stuff. This is the big stuff. Okay? Conduct yourself like a trader when you're not trading. Like a high performance person, like an athlete, like a top class musician, whatever. You're a performer, because then only when you come to trading you can perform. If you don't perform outside of, in your regular life, you think you're going to just show up to trade for 30 minutes and perform? No way. It's not going to work. No way. Right? Very important. Yeah, similar thing here. Again, day trading, one of the key important traits, resilience. You got to get back in the game after stopping out. Remember we started with this, RVR? You have to be able to stop out. And the only way to do that, the only way to be able to afford that is if your winners are big, right? You stop out, you can still get back in the game because you know your winners are big and it's just a part of the game. So either stopping out or missing a trade or not even getting a trade, sitting there for 3-4 hours and not getting set up, all of those stuff, all those things require resilience. All of those things just feel like you got hit in the face. It's not just a stop out, it's also sitting there and not getting anything to work. Or seeing something there and then not taking it and missing it. All of those things are the same thing as getting hit in the face. But you still got to get up and wait for the next setup. Remember, every trade is on its own. It's isolated. It's compartmentalized. Do not mix up your trades. Keep your mind like a waffle, compartments, not like spaghetti. It's all messed up. Very simple. Yeah. Float like a butterfly, sting like a bee. Best thing in the world. That's what it is. And really, Muhammad Ali would have been a brilliant trader. The best ever. Best ever. All right, so that's the presentation, guys. So if you want to get in touch with me, you've got this QR code. All the details are there. You've got this link as well. If you want to get in touch with me, all the details of how to get in touch with me, social media, whatever, it's all there. At the moment, we have the Trading Terminal course. That's 50% off. Go take a look. If you're interested in mentorship, scan the code or follow the link. Everything's in there. Of course, anyone in Dubai or Abu Dhabi, give me a call. Happy to meet up. I keep meeting traders all the time. All the time. All good fun. And what I'll do is I'll make it easy. I'll give you guys this link here in this chat room as well, so you can click on it if you don't want to scan a code. It's all there. Again, the whole Black Friday thing is going on, so go take a look. And now we can do Q&A. Okay, now we can go off on a tangent. This is my favorite part. Oops, sorry, I lost the webinar. What the hell? Sorry guys, just a moment. There it is. Okay, you guys still with me? I lost the screen for a moment. Bootleg recording. Oh my god, IG. You owe me royalties. All right. Who had questions about what? I know there was a few that I told you all to ask me after. Gagan? Ah, good. Thank you very much. Okay. Questions about levels, right? And what else? What did we have? Stop losses on options. Okay. All right. You know what I'll do? I'll open up my DOS platform here, and we'll go through the live market, which is a great way to answer questions. It brings it home, you know, makes it real. I don't like text and theory. I like getting in the ring and starting a fight. That's where the fun is, right? Exits on Apple. All right, let's start with. Oh, gosh, I have way too many screens. All right, give me a moment. This thing should fire up. Everyone seeing DOS here? Everyone good with it? Clear? Otherwise, let me know. I don't want to have trouble with this thing again. All right, clear. Yes. Okay, good. Today we had Apple. You want to talk about Apple? All right, Apple. I took this trade on Apple. All right, so levels. First thing, these levels. I think I had them on the chart from the last few days. Anyway, you can see the tops there. This is today. So, but you see the last 3 days, very obvious rejection. So that's the level. That's been sitting there for 2 or 3 days. You have yesterday's low, which is pretty obvious. I think it was a pre-market was bouncing off that as well. But yesterday's low is more important than that. Go back and look. It was firm resistance. It was firm over here. It was a closing price. Okay. Go further back. You can see it's definitely been in play. It's been a few choppy days, but you can have closing and opening prices right there. Here it's resistance. Then when it goes through, just a breakout. You can see that. And a very recent level, if you look at some of my previous webinars, there's one on traumatic levels. And I talked about that even in Vancouver for a little bit. But traumatic levels, this is a traumatic level right here. Very important level right there. Very important level right there. Now this one in the middle was a little trickier, but very important. Why? Look at this. Look at this thing. Big consolidation zone, then finally popped up, and this is another consolidation zone, and this is where it found that extreme support. And when it broke down from there, it really broke down from there, and then all it did is retest that area. Look at that. Retest. Over here, this is as high as it could go. Over here, this is as low as it could go. Support, turn, resistance. Very important. Right? That level's been there for a little while, I think. So those are the 3 levels I had on the chart. Apple opened up. What happened? 5-minute candlestick. No trade. Second candle breakout. Beautiful. I like it. So I'm looking for it to retest this level, this area. It goes to retest. And this is a bullish candle. Obviously, there's nothing telling me that's a retest. But this candle closes bearish. Now I'm thinking, there we go. That's a complete retest of this area. If it makes a new low, I know that the market's in my favor. And sure enough, this candle went up a little, made a new low. I entered at the new low. Stop loss was, well, the target was here, obviously. Stop loss, was, I think it was just above the level. I was being a bit conservative. You can put it up there, but you don't get good risk to reward. Put it up there, it's still tight. Right above the entry candle, that works too. That would have been the right one. And off you go. And you go down for the target. And that's the trade. There it is. Got in and got out near the low. That's me getting in and getting out down there. That's the trade. Simple enough. So I'm picking levels and I'm doing this naked candlestick strategy that I shared with you today. You can do it on candles. You don't have to do it on options. You can do it on stocks. It's the same thing. It's so simple. Seriously, guys. Why do you guys always complicate the matter? I don't get it. Everybody, all of you, it drives me nuts, you know? Why do you think you don't see me very often in the BBT room, moderating the room? Because everyone's got all complex questions and my answer is usually You're too complicated most of the time. So there's not much for me to add. All right, Apple. So what else did we have? You guys wanted to talk about? What am I missing? Let's just go with today's charts. What do we have? Microsoft. Yeah, I didn't trade Microsoft because look at this. So I had levels. Again, you guys want to look at levels? You can see how yesterday's low was very important. Also previously was important. Look at that, very important. So that's it. This level stays. Simple. This middle level was at 414. Very important on this day. You can see how significant it was. Came down, boom. Now it's not going a penny lower. Look how important this level is. 414. That's on the chart. Up here, about 416. Why is that important? Again, look at this. Breakout, and it's in this zone. Look at that. It's resistance, turned support. So these are three obvious levels. They're on the chart today. And then, what does it do? It goes, it breaks down. All right? Goes back to retest. Bearish candle, not genuinely bearish. Still more of indecision than bearish. But let's just say, even if this was a bearish candle, as in it closed near the low, then the new low, would you enter the new low here? With a stop loss above there and the target down there? No way, no way. There's no RVR on this, so forget about it. And look at the next one. Again, breakout, retest. The retest is complete when this candle closes bearish. This is a good bearish candle. Would you enter the new low here with a stop loss at the level? No, you can't because the target's right there. There's nowhere to go. Both of their trades would have worked. If you trade like that, you're not going to make money. You're not going to make money. You'll have a few winners like Microsoft today, but you're not going to make money in the long term. That's why I didn't touch Microsoft today. Absolutely not. Naveed, you want hotkeys? Okay, I'll show you hotkeys. Okay, for me, hotkeys are very simple. I either buy contracts or I sell contracts. Okay, and the script, I'll copy it for you. There's nothing to it. It's just the script, which is no different than the script for buying a number of shares. I have the number 10 here. You change that, that's how the position you would get. And then if you get use it, okay? Always important. Always important. All right, got it. Hassan, you put only, yeah, 2 levels. I rarely put 3. Samir, no, I'm not looking at those levels. And now I just draw my own levels. I'm not looking at any levels. Trader 0, Trader O. My stops, I know where they are. So let's look at AMD. That's another trade I took. So let's do it this way. AMD was a fairly simple one again today. I had my levels. It came down to the level. Looks like a good breakout. Goes back up. Completes the retest right about there. And then the new low is where I'm entering. So in the middle of the body of this candle somewhere. Stop loss above the level or just above the candle. Going for the target down there. Now I know where my stop is, right? Before I enter, I know where my stop needs to be and where my target is. So as soon as I put the position on, very quickly I like to put the stop in and the target order in place and go. Usually I put the stop in first and leave it. And then if I'm going to leave the computer and go somewhere else, then I'll put the target order in and let it go. That's it. Fed pushed the market up. I don't know what's going on with the market. AMD reversal. Let's see. Would there have been a reversal here? I don't see any reversal set up. The closest is this candle being bullish, but it's not an engulfing candle. The low of this candle needs to be lower than the previous candle. So basically a big wick. Then close bullish, then the new high, and then you can enter the new high, stop loss right below the level, and then go. I wouldn't take this long. Not a good setup. It worked, but it's not a good setup. I can't tell you again about win rate, how important that is. Again, you don't have anything else to confirm to you that this is going to go. I mean, do you have a moving average or an RSI indicator or a VPOC or a cam pivot or something like that? I'm not using any of that. Nothing. It's straight up. That's how I do it. Explain levels on NVIDIA. Sure. NVIDIA. Let's go to NVIDIA. Oh yeah, NVIDIA was wild today, huh? All right. First, most obvious level. Look at this. Comes up, resistance, right? Double top. Is a top? Is a top. Daily chart double top. Big level. That's sitting there. Sure enough, it breaks out on this candle. It bounces off on this candle. This candle, it breaks down. Then it goes up. And look at this. On the previous day, yesterday, it was pretty close to just finding buyers right about in that area. I mean, this level has been on my chart for a month, I think. Right? And then, I'm looking at this gap. This is another interesting point. It gets stuck after it rejects this level. It just bounces around a bit and then it gaps up. And this is the candle that broke that key level. But where did it find the serious buyers from to break that level? It found it right here, which also happens to be the closing price on this day, which happens to be close to the opening price on this day. Those buyers that were here, basically here, they didn't let it go lower. And here, boom, straight up. So that level's on the chart. And this one, obvious, top right there. That's it. Those are the levels. Nothing else on it. Room to the left, we talk about that. Okay. So here it is on NVIDIA. Let's say you see this hammer. Let's say the target's down there. Ignore that this level is in play. It's 142. There's no 144. For example, okay? And you see this huge reverse hammer with that long tail. It's a perfect setup. All you gotta do is wait for the new low, take the entry, stop loss right above the level, and you get a good risk reward to that target, right? Cool. And what makes this really good is that there's room to the left. See that? There's nothing there. It hasn't been here in a while. Has not been here at all. Didn't even go there yesterday. It didn't go anywhere. I mean, well, how far back do you want to go? It doesn't go. That's room to the left. And the thinking there is, the psychology is, very simply, the market does not return to where it rarely trades. Simple. It rarely trades in this area, 150 and up. So when it got there, it pushed down. There you go, the void. And then the new low. And it happens to be your level is at this place where it rarely trades. That's interesting. And then it gives you a perfect candle setup. And a new low. You know what? Now I got FOMO. I should have traded this today. But my target was here. The risk to reward was not, it's on the edge. It's barely 3 to 1 if I'm really precise about it. But I don't need to go and risk money on this. Keep it easy. Hey, look at this other one. Look at this setup. Comes to the level. What about this hammer? New high after that. Why not take this? Anyone see that? Why not? I went through this. Come on, guys. Yeah, big red candle, right? Giant candle before it, right? Absolutely. And there's actually two things I see. One is a giant candle, and the other is you can even perceive it as a double bottom. There's a bottom, and this bottom's lower. And there's two reasons not to take this on both setups. It's not fit. And sure enough, if you took it, you'd be stopped out. Right? So making sure that your candle patterns are precise and making sure you're waiting for confirmation after that precise candle pattern. Then you take the trade. Then you get a 50% win rate with 5R. Now do the math. I think that, in that way you do make some money. And now you're here to stay. Does that make sense? Yeah, I don't see any other setup here today. It's messing around. I don't see anything. So there's that one. What else, guys? BW, do you do overnight trades? No, I don't. I don't need to. I don't want to. I don't need that stress. Used to. Sometimes, rarely, I'll put on a spread with options. But I have long-term investments. But those are like 5-year pictures, 10-year pictures. That's a different world. Slide with the candlestick rules. What happened? You missed the rules? All right. Where is it? That's a good question. Where'd the slide go? Oh, no. Just a moment. Oh. Here it is. I don't know where that went. Anyways, can you guys see it? Is it on the webinar? Yeah. Where's the rules? Rules. There. That one. Okay, that's the slide with the rules. Make sure you get that screenshot. Amazon. What did Amazon do? Oh, that's right. I remember I got so much FOMO on Amazon. But look, no setup. I don't see anything. You got it? You guys got it? Okay, yeah, you got this. All right, let's get this out of the way. Let's look at this one. Oh, what the hell? Amazon, yeah, pretty wild, huh? So levels first. Always first step is levels. That was an obvious level. Look at that. Consolidation, push up. That's where it rejected. That's a key level. You got the breakout. Pretty obvious. And then it found support there again. So resistance turned support. That level has been in play. Straight up, simple, right? That level's obvious too. Push up, retest. You can see confirm your retest. Off it goes. So that's a level. 2 levels. Here, Amazon, down. There's no way to go long here because, yes, there's room to the left, but this is not a perfect long tail hammer, right? So forget about it, even though new high and all that. So if you took it, look, you would have stopped out. What's the point, right? So consolidation, breakout, break back in. Maybe you see this as a retest. I don't see this as a perfect retest. This is a very tough one. I mean, you seeing this as a bearish candle? I don't see this as a bearish candle. And then the new low, yeah, it would have worked, but really, very hard. And let's see, if you have a level down here in this area around 198, this would have been a good setup. I don't have a level here, so I didn't set it. So it came down, small candles, perfect hammer. The new high is there. That's where you would enter. Stop loss below it, or even below the hammer, you're going up. But it's not at a level. And where are you going to go? Right up to that level. So you don't trade when it's not at a level. Very, very, very important. Don't trade up when it's not at a level. So even perfect setups, but not at a level. Not interested. Just not interested. So no, I did not trade Amazon. I did not see a single setup, and I still don't see anything. Trading in the Zone. Yeah, good book, Trader Zone. Trader Zero. Is it Trader Zero? Trader O? I don't even know. Whatever. Very good book. Again, 80-20 reading. I've read about 20% of that book and got 80% that I need to get out of it. So do it that way. You can read a lot more books. Cool. What else? Gosh, I'm losing my voice. MU. Why MU? What are you doing tracing these exotic stocks? Alright, so it wants to go. What do you want to know about MU? How would I do it? Or let's get rid of all these old levels and stuff. Okay, what do we have? We have this, look at this consolidation. I see the top approximately there. I put the level there. Oh, look at that. It happened to bounce there too. How cool. Going up. I see this. This is where the sellers really took charge, right? Look at that. Bang. Right there. Sellers want to defend. Oh, look at that. I just picked these levels out and it happens to be perfect on the price. So, MU came to the level. Do you see a reversal pattern to take this trade? I don't see anything. Giant candle coming down, not even a hammer, no double bottom, no nothing, no engulfing. Let it go, there's nothing there. Dari, RVR, okay, good question. And good timing too, you know why? Let's say, for example, you enter this trade at 98.50 going long on MU, okay, right about there. Your stop loss is below the wick of this candle, right there. So you can just eyeball the distance. You know, it's approximately this much, was about 50 cents. And the target's up there, 102, let's say. I mean, what's your RVR? Just eyeball it. Do you think it's 2 to 1? Maybe 4 to 1? What do you think? No? Nobody got a guesstimation on the RVR on this? This is like 20 to 1. Whatever, yeah, Andy Summer, 8 to 1. It doesn't matter. It's better than 3 to 1, right? That's all I care about. If it's better than 3 to 1, take it. Especially if it looks like it's off the screen. Here, look at this. This will be fun. Look at this exercise. So when you enter this trade, you're entering right here. Stop loss right there. Okay, it's not a setup. It's not a trade I say you should take. I wouldn't take this. So stop loss below, you enter long. I mean, where's your target? You're looking at the screen like this when it's live. Where's the target? I mean, it's not even on the screen. It's way out. All right, so yeah, RVR is in your favor. Take it. If your setup is there and the RVR is there, you got to take it. That's your trade, but you got to take the trade. That's how the pros do it. When the setup comes with the RVR, you have to put on the trade. Otherwise, they're kicked out of their job on Wall Street to get someone more aggressive in there. Simple, right? So that's how I do RVR. Just eyeball it. You don't need to sit and calculate every dollar and penny. Don't waste your time. Keep it simple. Peter Z, options and stocks. Listen, I'm not going to talk much about that because a lot of people get overexcited and end up blowing up their accounts and then emailing me, you told me to trade options. No, I'm not telling you to trade options. John, yeah, that's a decent tool. You can try that one. I like that one. That works. The thing about options is leverage and buying power. Your buying power will take you further. Okay, that's what I'm using options for. I don't care about the RVR side of options. I'm looking at the stock price. I'm trading the stock price. I'm just expressing my view with options. If I think it's a long, I'll buy call options. If I think it's a short, I'll buy put options. And I can basically get a bigger size with less buying power. So what I've actually done is taken out about 80% or 85% of the cash from my day trading account, put it to other uses. And so I maintain just the bare minimum cash that I need in my account to trade the kind of sizes I want to trade. And I do it with options, so it's real capital efficiency. Again, 80-20, right? Everything. 80-20 is everything. If you want to ask me any question, I'll always come at it from the 80-20 because that's just how I do things, right? And that's it. It's just buying power efficiency. But again, careful with your sizing. It's easy to go and risk 50% of your account on one trade. So you really need to understand that. Understand how that works. Okay? Very serious. Maybe I'll do a webinar on options because every time I do a webinar, everyone sees my trades and like, well, what about options? Well, I haven't done anything with options. The thing is, there's nothing I can add for options that's not already out there. Megan and Jared and everyone's done all this stuff with options, and I don't do anything beyond what they're doing. I actually do 1/10 of what they do with options. So there's not much I can add for options except okay, if I want to go long, I'll buy calls. If I want to go short, I'll buy puts. There, that's my options webinar. It's done in 5 seconds. there's really nothing. What do we have? Naveed, how much of your account equity do you risk on a single trade? For me, I can go up to 10% on a single trade. But again, that's my risk appetite, and 10% of my account, which for me is a very tiny percent of my net worth anyways. I've made sure that the rest of it is not available. So yeah, it's options. I'm going with capital efficiency, right? And I don't mind if I lose 3 4 trades, it's okay. Ask my mentees, I trade with them live every day. They've seen me down 30, 40, even $60,000 in the first hour or 30 minutes. And then I close the day up $20, $30,000. Options are powerful, really powerful. So be careful. And I do it all on a $100,000 account. I just start with $100,000 every day. I don't need more than that. Sometimes that's way too much anyway. So yeah, careful with options. RVR is huge, but RVR is only huge if you're getting a good setup and good target. Just like we talked about earlier today, right? Very important. Otherwise, trying to get RVR with options, then you're talking about going out of the money, you're scalping, you're doing, that's a different world. I used to trade like that. I'm not going to talk about that here because that's, I think, is too complex for most people. And there's a good reason I stopped trading it too, because it's just too stressful. There's easier ways to make money. So I'm not going to encourage you to go down a path of complexity and risk. I'm encouraging you to go down a path of simplicity and going more stress-free. Much easier. V, what do you say? I see RVR on the stock chart, but aren't you concerned about the expression on a loss on the options when it comes? Yes, exactly. That's why position size is so important, V. You don't want to go and buy 10 contracts without knowing what 10 contracts really means. Really, I'm serious. Don't mess around with that. Position size, very important. Do you access live trading by buying the course? Is that a personal question? James, it's a separate thing. Here, how will I get it to you? Here it is. Let me see. Here you go. So in this link, James, there's 2 separate, click in there and you'll see there's a course and there's mentorship, and they're 2 separate things. With the course, you'll get access to me and into the mentorship community, but not the live trading and one-on-one stuff. That is a separate thing, which the details are here in the link. Why would you not trade in Mu Long at the Doji? Cozy driver, bonehead. Where? Which Doji? At the bottom. I know why. Okay, listen, this Doji is very simple. Candlestick patterns, right? It's super bearish. Look at these big, strong red candlesticks. The next Doji is telling you that it's indecision. What that means is it's been bearish and now it's stopped being bearish. It's not saying it's bullish. It's saying it's bearish. I'm sorry, it's saying it's indecisive. It's not saying that it's a V reversal all of a sudden. It's not. That's why. This is indecision. This doesn't have a massive long wick or anything like that. Even with a massive long wick on this candle, I still wouldn't take it because previously it's been very bearish. And we've seen a few examples of that already today. Again, candlestick trading, right? Really simple, but really precise. Keep it simple and keep it precise. Don't go messing around with your patterns. I'm telling you, you do this, you trade like this, you don't have to go learn about the tape or the level 2 or the pivots or the VPOC or bookmap. I mean, I have none of that. You don't even have to learn about these volume bars, which I used to use heavily. I've just dropped it. I used to use the tape heavily in my trading, and that's pretty much gone. I can still use it if I want to, but I've distilled all of it just to this. Levels and 5-minute charts. And again, the results of doing this, and the real reason I'm encouraging, the results are that 50% win rate with 5R winners typically. You kind of make money doing that, right? And my trading has gone upsized a lot just by doing it this way. Very simple. I'm not saying all the other stuff is wrong. There's no right and wrong way to trade. But this is the best way I've found so far. So just chilling out. It's so chilled out. I'm putting on more risk now than I ever did before, and I'm stressing much. I'm not even stressing at all. Showing up for trading is like showing up at the beach. Put up your umbrella, pop open a beer, relax. Enjoy the sun. Oh, you get a trade. Okay, put on the risk. It either stops you out or it goes. Whatever. And that's it. That's it. Most of the time, I'm busy mentorship and doing mentoring stuff while I'm in trades. So I'm doing live trading with all my mentees. So I'm answering questions, helping them with their trades, all that sort of thing. So my energy goes there. I'm not really much into my own trading anymore. It's just because it's simple now. That's why. Dina, yeah, I trade live daily, every day. Almost every day. There's rarely like when I'm not well or something, I may not trade. But it's every day, and I record these sessions every day. And yes, those recordings are available in the course, in the free sections, module 8. So you can see recordings of yesterday's trading, last couple of days. Today's one, I'll upload it after this webinar. All that stuff. Marcel's, I don't know anything about swing trading. I don't bother with swing trading. I don't need to. James, how much do I average per month? Follow me on Twitter, you'll find out. My P&L's out there. Or, more accurately, come trade live with me. You'll see my P&L exposed. This is the screen I share when I'm trading live. Right here. Exactly the screen. My hotkeys, everything, and you can see my P&L going up and down and whatever. If you want to know how much I make, show up live and you'll see it. Nice and easy. Dari, they're two separate things. They don't have to go in order, whatever you like. The course, though, I gotta say, I'll put it this way. You showed up at this webinar. You've already experienced a good chunk of what's in the course. So I'm not sure if the course will add a lot of value to you beyond this webinar, because this was a big one. This is more like the 80-20 of the course. The course takes everything we discussed today and goes into a lot more detail. So yeah, perhaps it's time for the mentorship stuff for you. Dave, thanks. Yeah, guys, I've been working with Dave K here for a while. He shows up every day, and Andrew, and Dan. Yeah. Oh yeah, a lot of my mentees are in here. So ask them if you want any questions of how the mentorship works, what we do. I can just tell you, but just ask a question in here. Many of my mentees are in here. Shane's in here as well. IG, no, there's a few guys in here. Yeah, everyone's in here. IG, I'm certain that you will continue to streamline, simplify approach until the brokers transfer money. That'd be nice, IG. Then I'll just show up and do webinars all day and go to these BBT summits and meetups. But the truth is, I enjoy trading. Try to get me to stop. Try, just try. You can't. I enjoy trading so much that I have to remove these indicators and stop over trading. You're welcome, Dari. I'm glad you'll like it. That's important. That's important to me that I come and do this and you guys get some value out of it. That's the feedback I'd like to see. And if there's something different you want to know about or questions, that's why I do the Q&A stuff. So in case I passed over something too quickly or something. Cool. Income, Jay. No, I don't believe in passive income. There's no passive income. There's investing, but that's not income. That's capital gains. You want income, you got to provide value. And that's as simple as it goes. Anything, anything. You got to be a chef. You got to be an engineer. You got to do something. There's no such thing as passive income. I don't believe in that. That's not income. If it's passive, it's like, what, interest payments on your account? It's nothing. It's not even keeping up with inflation. I don't know about real estate. Real estate. No. Real estate's not my headspace. I don't like it. Angel, cool. Glad you liked it. Good. All right, guys. So, any questions before I lose my voice? I'll be in the BBT room tomorrow at what time? I'm losing my mind here. Just a moment. What time did I say I'm going to be at? 10 p.m. Dubai time. That's 1 p.m. I think. All right, 10 p.m. Dubai time tomorrow. I'll be in the BBT room. Just so look up the time zone, please. My brain is hurting. And of course, yeah. So if you guys want to reach me, again, you guys keep losing the link, so I'll put it up. Here's the link. You can find me there. Any details you want to talk about, or Instagram or Twitter, or the course, the mentorship, the free material, I'll put it in the announcements here. It's all in this one link. Everything's there. My email address. Reach out anytime, any questions. I'm always happy to answer. I've actually backed up on emails. I'll probably answer those now, 3 or 4 emails. And that's that. Cool. Hardeep, awesome. All right, guys, thank you very much. Thanks for showing up. And yeah, my brain's going to shut down now anyway. So I'll see you guys in the chat room. Otherwise, I'll see you in the mentorship stuff. Take it easy. Bye-bye.